Good evening. Thank you for joining us in our presentation, which is an analysis of the financial performance of Water Utilities Corporation. My name is Jesem Huyagombalume, and I'm representing Group 3. Water Utilities Corporation is a parastatal based in Botswana, headquartered in Gaborone, which has a sole mandate of providing water reticulation services to the communities around Botswana. For the financial year, ending March 2021, Water Utilities appointed PricewaterhouseCoopers as an independent financial auditor. The role of PricewaterhouseCoopers, known as PwC, was to scrutinize the business transactions of Water Utilities Corporation. Having scrutinized these operations, Water Utilities, PwC came up with an annual report in which we were able to discern certain financial conclusions based on the balance sheet, the cash flow, and the statements of accounts. All these financial documents provide a view into the Water Utilities financial situation, and the trajectory of the ratios that were discerned from these financial documents, helped us to determine whether or not the financial situation of Water Utilities was deteriorating or improving. In our analysis, we offered insights into the company's liquidity, the profitability, and the solvency. In the year 2020-2021, Water Utilities is seen to have observed an increment in the asset base, moving from 9.7 billion to 11 billion. This was a monetary rise of 1.3 billion, percentage-wise reflecting an increment of 13%. According to Gitman, in 2012, the rise in the Water Utilities Corporation asset base may be a symbol of the company growth. Generally speaking, as company assets grow, it shows that it reflects that a company seeks to achieve economic value through those particular assets. And this is a view supported by Eddie and Alfrisi in 2019. However, though, it is remarkable that when most companies aim to achieve this economic value growth, they have to input or suffer the large capital requirements at the initial stage of their value journey. And this was reflected in the Water Utilities Corporation annual report, where we saw a rise in the asset base, leading to a drop down in value of about 7.6%, in essence 1.5 billion of the cash and cash equivalents. In the preceding year, this value was seen at 1.666 billion. The drop in cash and cash equivalents from Water Utilities may lead to the loss in NPV projects as they seek to attain external funding from external partners. However, though, the low cash and cash equivalents may not be all bad news. According to Zwiebel in 1999 and Stoels in 1990, holding a minimum cash in an organization may actually prompt debt financing, which brings along with it strict monitoring on the use of funds and limits the managerial discretion, which may arise from keeping high amounts of cash in the internal organization. Moving on, we'll take a look at the statement of financial position for the years 2019 through 2021. Justifying the views of Zwiebel and Stoels in 1990 through 1996, we can see here that as Water Utilities aims to achieve a growth in the asset base, it was seen that the total equities and liabilities increased by 14% during the year 2021. This rise in the equities and external debt, i.e. the liabilities, also led to them the ratios of the debt to equity ratios rising. These debt to equity ratios will be expanded on by my colleague, Tumisama Bopiwa, who is about to present on those aspects of our analysis. Thank you.
Thank you so much, Mr. Gombalumba, for that. As he had mentioned, my name is Dumisang, and I'll be taking you through to the solvency ratio, as well as the statement of comprehensive income. So just to begin, what is the statement of comprehensive income? This includes all the changes in the owner's equity, which resulted from the non-owner transactions and events. It is useful in predicting the changes of the net income for the next financial period. So looking at the figure 2.0, we could see that the revenue from the contracts with customers were down by 0.8 as in 2021 as compared to 2020. And also the total operating expenses were exceeded by 16% in 2021 in comparison with the previous year. Therefore, we can see that the total comprehensive income for 2021 was extremely high, and it was at a loss. And this may have been contributed by the total operating expenses. However, various authors have noted that statement of comprehensive income may somehow not be a true representation of the financial analysis of a company, because it includes unrealized gains or accounts receivable that have not been yet paid by the customers. So this cannot be actually used solely as a reliable factor to analyze the financial condition of a business. And then moving on to our next analysis, we'll be going on to the financial analysis using the solvency ratio. The solvency ratio, it is the ability of a company to be able to meet its long-term obligations. Now, one of the solvency ratios that will be grading on is the debt to equity ratio. Now, the debt equity ratio, we can define it as a company being able, the extent to which a company is able to cover its debt. Now, being based on the total liabilities and shareholders' equity, we could see that ranging from 2019 to 2021, there was a gradual increase of the debt to equity ratio. And according to Neilbag 2022, the acceptable limit or range for debt to equity ratio ranges from 1.5 to 2.0 or anything less than 2.0. And we could see that water utilities has a low debt to equity ratio based on the liabilities and shareholders' equity. Therefore, we could say that it does not require any more liabilities to cover its debt. And then looking at another perspective for the debt to equity ratio, we can actually base it on the long-term debt, and which also can be paired with the capital and the reserves of the water utilities. And for both years, according to the annual report for water utilities for the 2020 and 2021, it was marked at 0.0 or 4%. And as well, in addition to that, the water utilities regards this type of ratio, the debt to equity ratio, the most acceptable percentage is anything less than 10%. So with this, we can say that this reiterates the fact that it has a low debt to equity ratio, meaning that it is really at a lesser risk. Therefore, this attracts potential investors to it. Now, with this, I'll be handing over to Me Asalepele Sutogile to give you more an in-depth on more of our analysis. Thank you.
Thank you, Tumi. I am Asalepele, like she's already mentioned. So I will be taking you guys through on our liquidity ratios. So liquidity ratios, what they do is they measure the ability of the company to be able to pay back its short-term obligations. So short-term obligations, we're talking current liabilities, which are normally paid within a year. So if you look at our graph, there are two liquidity ratios that we used to measure water utilities. So we used the current ratio. If you look from 2019 up to 2021, you realize that in 2019 and 2020, the liquidity ratio was above 4, and in 2021, the liquidity ratio was above 2. According to literature, this is very good because when we talk about a liquidity ratio, we are talking about the money that the company uses to pay off its debt. So meaning if it's 1:1, say a company has a debt of 100,000 and it has 100,000, for it to pay off its debt, it means the company remains with zero cash, which is not good for the company. So we expect the ratio to be at least 2:1. And you realize that from our graph, all through the years, our current ratio has been always above 2, which is good. So the second ratio that we used is the quick ratio, also called the acid test ratio in some other texts. So you realize that the quick ratio as well, all through the years, has always been above 2, which is also good. According to Rashid, the quick ratio is actually a better measurement of liquidity since it's fast because it eliminates inventory. So what essentially you do when calculating the quick ratio is that you remove the inventory and you calculate your assets that you can get within 90 days, because with inventory, it can take you longer to actually sell some of your inventory to actually get the money. So hence why it's called a quick ratio. So basically from our liquidity ratios, we can tell that water utilities has no problem paying back its debt. However, Rashid goes on to explain further that the downside of having a high liquidity ratio might be that you get your money tied up as a company in cash instead of using the money for expansion-related projects. And that's it for liquidity ratios. So moving on, we'll be talking about profitability ratios. So return on equity. So return on equity measures an estimate of the owner's percentage return on their investment in the company. So essentially you calculate the net profit after taxes over the equity that has been invested in the company. So when you look at 2020, the percentage was 0.8%, and then in 2021, it was 3%. According to literature, a good ROE has to be above 15%. But if you look at both years, our ROE is below 15%, which means that water utility is not able to efficiently use its capital that it invests to convert it into profit. Another measure that we used is the return on assets. So the return on assets basically measures the ability of the company to get its return on the assets invested in the company. If you look at our graphs as well, you realize in 2020 it was about 5%, and in 2021 it was 0.14%. According to Investopedia 2022, an ROA of above 5% is considered good, which means in 2020, water utilities wasn't doing so bad. It was 5%, but then in 2021, it drastically went down. We could associate this to the fact that water utilities had to get more machinery, so they used more of their money to get more equipment, hence why the ROA went lower. And also the fact that around 2020, 2021, it was COVID time. So they had less return because a lot of people couldn't actually pay off for their services. So essentially also water utilities is not efficiently being able to turn its assets into profit. With that, I'll give on to my colleague, Mega Leboga.
Thank you, Ms. Asaleplesitori. As she have mentioned, my name is Kelebra Tonoko. I will be taking you from the recommendation and the conclusion for Water Utilities Corporation. I will be starting with the recommendation. As we have heard, Water Utilities Corporation is a huge organization with a big and critical mandate, and ensuring that the whole nation of Botswana is supplied with sufficient and clean water. As such, it deals with large number of customer and financial transactions. Even though the corporation has taken advantage of technology and introduced payment through online services. For example, it has introduced Orange Money and Botswana Post to make it easier for its customer to pay their bills. But still some other customers that fail to pay the services or that bill. And this means that there's still a room for improvement for the corporation. It is therefore recommended that the Water Utilities Corporation further invest more on technological innovations, such as the introduction of other computerizing accounting, such as ATM, to make it easier for the customer to pay their bills. This is according to Ismail and other 2019. This will have a long queues which can hinder people to pay their bills, and also some people prefer to pay their bills through ATM. It is therefore further recommended that the corporation increase the number of options in which the customer can pay their bills. Such innovation will likely help the corporation to collect most of the billions and billions of dollars that the customer they own. The corporation should consider hiring more professionals to house debt collectors and also the deputy sheriffs to help to collect outstanding balance. Furthermore, the corporation should also consider to reduce its expenses so that it can able to sustain itself financially and able to make profit. Lastly, what I can say, the corporation should also auction out the old equipment to generate more profit. As we have heard from my colleague, Ms. Sipule, she has mentioned that the corporation is not able to generate revenue from its asset, which she was talking about return on asset. And the acceptable return on asset is 5% to 20%, but the corporation still is not able to meet the acceptable. The corporation itself, its return on asset is less than 1%, which is not acceptable. Going to the conclusion, what I can say in our case study. In our case study, it is evident that the WUC or water utilities is lagging and have the critical decision to make. Results show that this business is desperately relying in the case injection from the share, which is the government grant. Therefore, any hope of the survival, it should make more strategic changes or any plan. This could entail cost cutting, downsizing, and employee compensation adjustment. Lastly, what I can say, according to Rashid, the downside of the ratio is, if not understood, might lead to the inaccurate inferences being drawn from the data. With all this, ladies and gentlemen, I present our presentation to you. Any question, any comments, you are just welcome. Thank you very much. This is your time now. Thank you. We will be hearing from you, ladies and gentlemen. This is your time.
Thank you very much for the informative presentation. I just wanted to ask about, public perception of water utilities. We generally feel that water utilities, or anyway, I think that water utilities is not an efficient company in terms of collection of debts. So do you think that is somehow affecting its operations?
Can I take this?
Yes.
Yes, definitely. And that's a point we agree with. I think if you can note from our conclusions and our recommendation, we did observe that there is a lack of debt collection from the water utilities corporation aspect, and we did encourage them to maybe consider taking on deputy sheriffs and professional debt collectors, if I may say. Thank you.
Okay, thank you.
Okay, thank you. Thank you for the wonderful presentation and an insightful one for that matter. Mine, I just wanted to know that, to ask that, is it a listed corporation, water utilities? Thank you.
Can I also take that one? Or is okay. Well, water utilities is 100% government owned.
Okay, yeah, no, thanks, sir.
You're welcome. Okay. Are there any further questions or comments? And
yeah, I would like to make a comment. I don't know if Mr. Muderi, have you been fully answered? Because you wanted to know if water utilities is listed. So Mr. Jesse didn't, he just told you that it's 100% owned by the government, but didn't exactly say whether it is listed or it's not listed.
Okay, no, I think, yes, you can go ahead and add a bit into it.
Okay, yes, it is listed. A listed company can choose whether to put its shares up for sale or not. So water utilities hasn't decided to do that, but it is listed. It is in the Botswana Stock Exchange. Currently, the government is the shareholder, but they can decide any moment whether they want to put their shares up for offer. Does that make things clear?
Yes, it clears it. Thank you.
All right, thank you.
yeah, I think for the lack of questions, thank you. I'd like to thank you once more for joining us in our presentation. And I would love to also thank the rest of the team for joining in and compiling this report. And we'd also love to extend our greetings and our regards to Mr. Bill Burke, who's the module instructor for this particular one. Thank you so much.